because there is nothing high impact, we're just going to get to business. We're going to do what we do. We're going to have some fun. Um, let me go to the Nexgen video page, guys, and I'm going to go to live. And yesterday's video, so here's how today is going to work. I'm going to give you the URL to yesterday's video. There is an hour on the front end of everything that we're going to talk about today. And what we're going to talk about today is the KISS plan for NinjaTrader, guys. So there's going to be a lot of live trading for educational purposes. I guess I should get the lawyer thing up real quick. There is going to be simulated for educational purposes. We're just going to pull the trigger when the rules are met, guys. We're going to manage it. We are not going to break rules. That's the biggest thing. And this is us collectively. We're going to have some fun. But this is educational. This is informational, guys. My job is to teach you to read indicators. So we're going to work through the Kiss My Yes. Ron. And guys, we are going to use the KISS plan from NinjaTrader. When we look at NinjaTrader, is everybody good with the S&P? Looking at the S&P today? We're going to pick one market, guys. We've got crude oil or we've got the S&P. If you have a preference, let me know. First vote gets it, right? We're going to keep it on the S&P. We're going to use the KISS plan, guys. And what that means is that as we watch, let me find it real quick. As we watch the S&P today, I'm looking for my, there it is. We're going to look for a couple different things. We are going to look for strong triggers. And in order to even look for rule number 2, there will have to be a separation between the small and large going in the direction of the trend. The trend is defined by the color of the background. So if it's green, we're going up. We have to have a separation, smalls above large. If it's red, we're going down. We have to have a separation, smalls below large. So in the S&P currently, we do in fact have momentum. So rule number 1 is met. And then after rule number 1, we are very cleverly going to go to rule number 2, where we're going to make sure that there are no termination conditions. And there's 3 ways we're going to do this, guys. The first one is when price reaches a Fibonacci area, whether it is a divergence high or low, a yellow 1-to-1, or a fib, and none of our trigger lines have made it through that area, my rules, your rules in the KISS plan say absolutely no trades into that area. You cannot begin a trade. You can't go short into an area of support that has been deemed a termination condition. So what we're going to do is we're going to sit on our hands in instances like this. We're going to sit on our hands in instances like this. And then if we get 3 trigger lines through, both small and 1 large, as long as we have that momentum, rule number 1, we will look for a medium probability trade. And a medium probability trade means that it's not perfect. And it means that we are going to have to be from a strong top or bottom, that we have momentum on both charts, and there is absolutely no divergence present. This is our checklist for entry. So as we look at that market, we're going to say if divergence prints, can't do it. Don't have 3 triggers through. Can't do it. Once again, sitting on our hands. You guys are about to learn that 90% of your day is sitting on your hands. 90% of your day is doing nothing. 90% of your day is being patient. Because until you have a clear path, all 4 trigger lines below support, all 4 trigger lines above resistance, guys, you don't have the best of the best. You don't have the highest probability trend trade. You don't have momentum and path, guys, and this is your core, and this is our foundation. And we're going to lean on this heavy today. But if we do have momentum, if our path is clear, we're going to go define our entry, guys. And our entry is the same whether it's going up or whether it's going down. We are going to use a limit order to buy or sell a pullback at an area inside of triggers. So we are going to go off of this checklist, guys, the trend trade checklist. Is the market coming from a strong top or bottom? Did a termination condition reverse that market? If it did, we're going to look for momentum. We're going to look for that clear path, and we're going to buy or sell a pullback at an area inside of triggers. So I've got my KISS plan, guys, and I'm going to keep it handy. If the rules are met, we will enter the trade. If the rules are not met, we will not enter the trade. That's pretty much what trading is, guys. Trading is about advantages. Trading is about having an edge. It's about trading a pattern that you can prove wins more than it loses. The high probability trend trade is that pattern. That will be our focus on NinjaTrader. So currently, let's take a look. We do in fact have momentum. I have 2 triggers through a divergence high. I have 2 triggers below both fibs and a divergence high. Guys, this is not our look. Until 3 triggers get above the divergence high, we're not even in the neighborhood of looking for a trade. Does that make sense, everybody? We're going to do a lot of live trading today. I'm excited about it. We're also going to look at, I guess, NASDAQ. You guys want to do NASDAQ? And on the NASDAQ, we're going to do the exact same thing. We're going to use the TradingView KISS plan, guys. And we're going to read the 15-minute chart. And the same way we looked for momentum and path on NinjaTrader, we're going to define direction with the small triggers. We're going to define momentum, where price is in relationship to those triggers. And we're going to define path, making sure we haven't reached an area. And then the only trade we're looking for this morning, my friends, good morning, Sergio, is the trend trade. We are going to look for a pullback to an area with a close on the correct side of the triggers. So you're going to say to yourself, damn, Mark, you're limiting us. We're not doing much. Why don't you find every move in the market? Appreciate that, Victor. Because, guys, the markets trade billions daily. We're going to try to capture our share. We're going to do it with the least amount of stress, the highest probability. And today is going to serve as a great lesson that patience typically results in profits. Trading a pattern that you can prove wins more than it loses, giving yourself the highest chance of success. So whether it is TradingView or whether it is NinjaTrader, guys, we're going to have a little bit of fun today and we're going to go through it. We're also going to click on all the pictures that you guys have presented in the room. And I'm going to use this rather than that boring old PowerPoint to give you guys a couple lessons. And now some of you might get your feelings hurt if you broke rules and I have to talk about it. Most of you won't, because you know I'm the loving Novak here. Just kidding, so is John. So I'm going to click on all of these, guys, and I want you to see what's going on. We're going to throw some lessons out there, and we're going to see what we can do. So here's our first one. 15-minute short, strong side. Triggers are down, trend is down. Price is left of the triggers, it's the strong side. And from where he takes his entry, there's nothing in the way. There's nothing but room. And Paul, this is a great read to set it up. Now I looked at this earlier and I want you to see something. The trend trade rules say, wait for a pullback to an area. You did a great job of that. Get a down bar that closes below the triggers. You did a great job of that. Now what you have to do is you have to put your stop above the pivot high. The top of the zone is 58. You were stopped out at 57.25. You were stopped out at 60. And again, that should have been the first one that stopped you out. Does that make sense, Paul? Never gets to where the market shouldn't go. And what happens, instead of taking one loss, you manage to take 3. And guys, this is one of those awesome deals where if you trust the methodology, if you study it, if you learn it, right? You get in, your stop's in the right place, and it just waffles for a while, right? But your stop is protecting you, and it waffles for a while, and your stop is right here. And it's okay. It's a loser. Losers happen. But Paul, you had two in there that you just didn't need. You got a little jumpy. You didn't trust it. And it's your right to not take a trade. If you don't feel confident enough to keep your stops where the market shouldn't go, above that zone, above the pivot high, guys, it's okay to not be in that trade. Does that make sense? And Paul, I want to say I took almost the exact same trade yesterday, and I sat for 20 minutes while it went sideways, and then it did finally get me. But I only took one loser, not three. So guys, trust. If you trust it enough to enter it, trust enough to hold it. You thought you had the stop out of the way? I'm going to go back and I want you to see something. That's 58. That's your high point right there is 58, 57, 60, right? Even 61. You never even put it above the zone. You never even gave the zone the opportunity to protect you. Does that make sense? You got stopped out inside of that zone. Well, 61 wasn't. 60, well, 60. How'd you get 60? Did it spike? Did it spike to 60? I can't tell. There might be a line back there, so that makes sense. In at 51, that makes sense. If that was a spike, it's hard to tell because of the dots. That one makes sense, absolutely. So really only one. My apologies. I'm going to assume that because of 60, you were good. And then 61, just a pain in the butt. They just didn't go for you. Well, only on one, Paul, so I stand corrected, and I do apologize. On one, the first one, you got knocked out in the zone. The next ones just didn't go. And sometimes they don't go. That's the part about trading. Sometimes they just don't go. All right. 15-minute up, transition, clear. There's your open. There's your bar above, 48. The entry isn't until 48. So the entry is all the way up here. And guys, do you all recognize it as the prairie dogging? It never gets through that zone, Paul. This was your entry. It gave you 1 point to trouble. This is not a break above. This is just a bar that's peeking its head out. And then sure enough, it never gets any further and comes back down. Guys, these entries where you don't let the bar break away, it's still resistance. Does that make sense, everybody? In order for an area to be broken, and in order for an area of resistance to become support, it has to break away and pull back. And this is what we have lovingly deemed the prairie dog. Why? Because all it did was peek its head above. And they do move around sometimes, Paul. So maybe the zone wasn't there, but a close above the zone doesn't guarantee a break. It's the price action moving beyond. But they do move around. I took a trade yesterday. I was live working with John Novak. We were just talking, and I took the perfect trade. And then the zones changed, and I was in the zone, and I had to make the decision to either exit or hold. And I made the wrong decision. I held, and it came and got me. But they do bounce a little bit. All right, strong trending market. Broke terms, clear path. The challenge with this one, Pete, and I have to say it, is your first trade is at 44, which is right about here into all the trouble. And it works. You get down to trouble. And then there's your second entry directly into trouble, and it works. And then there's your third entry directly into trouble, and it works. And you trade into termination conditions 3 times against divergence directly from a fib, and it works every time. And then in your strong trending market, now you actually have a clear path. Sell the mid band. And this one fits rules. Guys, this one does not have anything that even resembles a clear path. But that's okay, because what Pete has is momentum. And guys, that first rule is the first rule for a reason. When you have all that momentum and everything says down, areas do in fact break sometimes. And Pete says, I'll take a chance to get to it because I have room to manage. I'll take a chance to get to it because I have room to manage. I'll take a chance to get to it because I have room to manage. And guys, take and manage is where you're all headed once you understand the very basic concepts. Once you can identify momentum, path, and entry, you have the best of the best. What Pete did is Pete had momentum and entry, void of the clear path, which means he said to himself, this is medium probability. It's not the best of the best, but it's still an outstanding look. With that much pressure pushing down, with the perfectly defined entry, I'll take the trade and manage. And guys, you're going to see a lot of that once you get over the hump, and it's not even a big hump, of learning the simple concept of momentum, that separation between the small and large, letting you know that the odds are favorable for the market to continue in the direction of the trend. And then once you understand that concept of terminations, that if none of the triggers get through an area, it's okay to sit on your hands. That if only 2 of the triggers get through, it's okay, but it's not great. When 3 get through with momentum, now we're looking for the medium probability. Now it fits the plan. But having that clear path will always be the best of the best, guys. So Pete, nicely done. A lot of great chart reading, putting you in a good position. Again, directly into pivot, stop out, at resistance, no momentum. You just get in and it works. What's that old phrase? Broken clock is right twice a day, or sun shines on a dog's ass, or whatever. Didn't have momentum, didn't have a clear path, didn't even have an entry. Guys, there are great trades that will fail. There are trades with void of every advantage that will win. And that brings me back to the idea that trading is probabilities, guys. Trading is taking one thing that you can prove wins more than it loses, or 2 things that you can prove win more than they lose, and then learning how to stick to it, learning how to adhere to it, and taking the hope out of your plan. So, Pete, I'm glad that one worked out for you. I couldn't find an advantage on the page. Paul, 15 minutes up, strong side, room to trouble. Pull back to an area, close above. You're in at 61, right as it's closing, out at trouble, and then let's make a little extra money. Paul, that is the perfect trade. Distance between your entry and the first sign of trouble. Do you guys see that? That is ideal. So first he says, the small triggers are up. Perfect. Prices to the left of the triggers. Perfect. Room to trouble. Perfect. Don't get in, don't get in, don't get in, don't get in. Boom, there's your entry defined. Pull back to an area, close above. And guys, one of the most important things you can do is from your entry point to the first sign of trouble, making sure you have room to get paid. Making sure there's enough room before you hit something so that the market doesn't bounce, spike, jump, or come back against you. And Paul, you did it beautifully. Nicely done. Your large triggers quit printing. That's weird. They just stopped right when you entered. Crazy stuff. I mean, that is the perfect trend trade, guys. That's everything that we talk about every day. And just a reminder again, if you're a little newer with me, the same first hour is typically the same hour every day. So we are foregoing the first hour today. You can see it in the video from yesterday where we talk about the rules for the high probability trend trades on both platforms. If you have questions, If you have questions about defining momentum, if you have questions about defining a termination, let me know. I'll help. Market continued up, all 4 triggers through, clear path, no momentum, but on a small chart, he does have momentum, and this is the perfect momentum trade. And nicely done. Strong triggers on the small chart. You can see the separation between the small and large. Price breaks and retests, and off it goes. Pete, that is the perfect momentum trade. And then once again, no momentum, absolutely nowhere to go, no areas inside of triggers, and you give yourself a couple ticks to trouble. And man, I'm just going to say it, Pete. The trading gods are smiling on you today. I'd go buy a lotto ticket. No areas for entry, no room to trouble, no momentum to break an area. And Pete says, F it, I'm going anyway. And they're paying you. They're paying you today. I hope they do it tomorrow. Oh, I recognize this chart. Long time no see, Miss Jen. Great to have you. Small triggers are down. Price is on the strong side of the small triggers, which means it is left of those small triggers. This is where areas are more likely to break. This is where bigger moves typically come from. And then, Jen, there's your pullback right to the mid-band, right to zones. There's your close below the perfect trend trade entry, and you carry it all the way to trouble. That is an effortless trend trade. That is the best of the best. That is the I feel relaxed. I'm not stressed. There's nothing in my way. I'm trading with a large chart. Everything is perfect. Nicely done, Miss Jen. And then just do it again. Triggers are down. Transition. Pulls back, and there's your first close. And Jen says, wait a minute. Rule number 2 says don't trade into stuff. And you don't. And look at the bounce. And then it clears it. Nice entry. And they said, let's see if she believes in her stops. And you did. And you were rewarded for it. Guys, entries are half of a trade. Management is where money is made. Nicely done, Miss Jen. Welcome back. You said back to rules, no stress. It's funny how that works, isn't it? It really is, guys. I'm going to take the trade because the rules are met. Why? Because my rules describe a pattern that I can prove wins more than it loses. Phil was nice enough to join the room yesterday. He has been taking nothing but trend trades, Jen. He had a 20 trade sample, 70%. Last time I did a 1 week sample, it was 73%. Guys, if you can't find a way to get paid on 70% winners, we need to work on your management. Pete, separation, smalls below large, space between. Oh my gosh, what a beautiful momentum look. Does everybody understand the momentum look? Kerwin, hey, good to see you back in. Mr. Joker, talk to me. Separation. All we're looking at is the distance between the small and large. That's momentum, guys. That's hard to stop. That lets me know that the odds are favorable for the market to continue down. Good day to you, sir. That lets me know that the driving forces want the market to go down. And then Pete says, check it out. They didn't reach trouble yet. So not only do I have a huge amount of momentum, I don't have anything to stop it. And then the market pulls right back to the mid-band, just below the trigger lines. Pete says, I'm not going to miss this trade. He knows where the market shouldn't go on the other side of those trigger lines. He goes, entered on the pullback, ran me over. No, it didn't. It just kind of retraced. And it went right where the indicator said that it was going. Why did Pete not freak out and exit? Because Pete knows retracements can go to triggers. And Pete stopped somewhere right up here where the market shouldn't go. And with that momentum and room to trouble, it went right to trouble. Where the market shouldn't go. Jen, where the market shouldn't go. Guys, this is one of the lessons that you've got to learn, because entries are only half. And when we talk about where the market shouldn't go, let's break off for a lesson real quick. Let me get my picture. Well, shoot heck. We'll do this one. Where the market shouldn't go, guys. When we talk about entries, areas inside of triggers, that's what creates the bounce more often than not. That's what sends you in the direction of the trend. Trigger lines define where the retracement can go. Areas inside define where it's most likely to bounce. Stops are placed 4 to 5 ticks beyond those triggers, guys, because once you get beyond those triggers, your advantage is gone, which means Pete never even came close to losing the advantage of rule number 3. And as a result, stop doesn't get hit. With all this momentum, it goes directly to Fibonacci. You're going to see that more often than you don't. What a great trade, Pete. All right, Miss Jen. Strong side, room to trouble, pull back to the area, close below, but those one-to-ones. Don't trade directly into areas. Those one-to-ones would have ruined your good time. Miss Jen, great trade, or great no trade. I was talking to John this morning. My brother and I talk all day. And I took this trade. Nope, where did it go? I took this trade on purpose, guys. Because we were having a conversation yesterday about trading into areas. And the large chart set up. And the large chart was on the weak side. And I told John, I said, everything says up. I'm just going to go up with the close on the correct side. And I'm going to trade into the mid-band, which is a violation of rule number 2. Rule number 2 says nothing in the way on the 1 minute. And I'm going to show you why. Because you see these areas, and that's exactly what they can do. Now, it did go up with the large chart, but that wasn't the entry. And guys, that's a lot of unnecessary stress. And if you go back to the NASDAQ, that's where it started. Right after all the pain and suffering. And it's just crazy how it works. No room. Look at that. Into one-to-one and it bounces. Into one-to-one and it bounces. Into one-to-one and it bounces. All from the weak side of the triggers. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is just saying, hey, there's too many great opportunities to have to be in every opportunity. It did reverse way up after that, Jen. All right, here's a trend trade. Triggers are up. Price on the strong side, space to the next area. Small chart shows a pullback. There's your close above. In at 93, you have a 1.5 to get to trouble. It hits it and falls. And Victor says, well, from the strong side, that's just another trend trade. What a great hold. And once again, we're seeing great stop placement, keeping you in the correct trade. Where the market shouldn't go. Victor, nicely done. Easy $210. Easy $210. And there's another one. 15-minute up on the weak side. Clear path. There's your close above. And just rock star, Paul. Great job. Another beautiful trend trade. Don't enter, don't enter, don't enter, don't enter into the zone. Don't enter, boom. There's your entry. Guys, trading doesn't have to be stressful. Trading doesn't have to be chaotic. Trading doesn't have to be scary. Trading just has to be consistent. Trend trade again, triggers up, price in transition. I'm going to disagree in your price in transition, Victor. Your entry is way below those triggers, which means you are on the weak side of the triggers. Does that make sense? So guys, when I correct, it's not because I'm trying to pull something off, but 93 entry is about right here which is below the small triggers, which is the weak side of the triggers, which changes the management plan. There's your entry above, directly into a midband. We just talked about this, right? And from the weak side of the triggers, you've got to suffer through not only the midband holding, but then a breakout bar down, and then a confirmation bar down that closes below the triggers. And from the weak side of the triggers, you're dodging bullets. And then finally, you do get the entry up here. But by the time you get it, it's 2 points here. And you do make 11 on this one. But from the weak side of the triggers, that could have very easily just dropped down. So guys, trading into areas, a lot of undue stress there. I'm glad you won. Guys, I'm always glad when you win. Always glad when you win. Never got a clear path. Sure enough, the market reverses. Now the triggers are down. We are on the strong side of the triggers. And entry rules say if I'm going to go short, I need to pull back to an area, would have to be up here, and then I need to close on the correct side of the triggers. I know exactly where my trade has to come from before it ever happens, but I want you to see something. See this zone? I'm going to put a line at the bottom of the zone. My entry can't trade inside of the zone because as long as I'm inside of it, my path isn't clear. Can you guys give me a why if that makes sense? As long as you are inside of that zone, you don't have a clear path. 1, 2, 3, 4, 5 hits. It feels like, yeah, I remember that one. So what's it mean? The triggers are down, I'm looking for shorts. It means I either have to trade to the zone or I have to wait for it to break. I have to wait for it to reverse. I'm going to wait for a better opportunity. Is it worth the wait? I think so. More often than not, it is. So we will see. We'll come back and we'll see what happens. Paul, did we see that one? Let's see what we have here. 15-minute up, weak side clear. There's your pullback, closes above. You are in maybe a tick or two late, directly into one-to-ones, which could be challenging. You pull it off, and you pull it off. Nice job, Paul. Trading into areas from the weak side, guys. It works less than it doesn't. Just a heads up. All right, momentum trade. Triggers are up. Strong side of the triggers. Breaks up. Pulls back. You're in right at the area, 47.5. No, you let it bounce a little bit. Behind the zone where the market shouldn't go. If this momentum is really going to push the market up to the next level, it shouldn't get back below the zone. So great stop placement, Trina. And then it pulls back to it, retests it, right? You never really lose that momentum. Momentum trade's still in play. And it goes where it was supposed to. Now here's the question. 47.5. 47.5. How did they get you break even? Lost momentum, so got out even. Okay. You closed. What changed? I mean, in the moment, your small triggers might have bent a little bit, right? But everything is still up. The area has broken. Resistance is now support. All of your triggers are facing up, and you're still on the strong side. So if you're going to take a momentum trade, commit to your momentum trade. Hold your stop. If you're taking the right trade, it's small risk, right? There's not a lot of risk on this trade. And everything is going great. Now, if your small triggers were below, obviously you wouldn't be in the momentum trade. Everything is still good, and that's hard to sit through. Having something to lose is terrifying. I know it is. Trust. Trust, trust, trust. It's hard. It takes time. But this is one of those looks, Trina, with the fluctuations, and I'll show you exactly what I mean. Let's see if we can catch it live. Well, that's why we don't trade in the areas. I'm going to just see if I can find an example. As this bends, you'll see those triggers bend and roll. But until the bar closes, there's really not a good example in there anywhere. Until the bar closes, Trina, you don't know if it's going to go up or down yet. And you'll see it bounce and bounce and bounce. And it's almost like a flapping tail. It's a great trade. It's a great trade. You just let the little look talk you out of it. Everything's set up. Those are hard. Management's the hardest part of trading, I think. Actually, I think sitting still is probably the hardest part of trading. But you took the perfect trade. That's okay. Break even. Good lesson. Break even and a good lesson. Trend trade. Triggers up. If you have to put a question mark, is it really? Price on the weak side. Space to the next area. Small chart. Price pulls back. You get in from the weak side. And you don't believe it. And you hold. And you don't believe it. And you give it all back, Victor. And you give it all back. So this would be where I say smoke and hopium. Let's go back and visit this one. If I'm on the strong side of the triggers, you should have probably, if you were following a plan, Victor, from the weak side of the triggers with 2 points, with $40 profit potential to get to trouble, was that really your best way to get rich? $40. You lost $240. So you were risking $240 for the potential of 80. Now guys, I don't do a lot of risk to reward ratio stuff in my head. But if I don't have any room to make money, there's no freaking way I'm risking that much. Does that make sense? If I can't make at least $100 per contract, that trade's not worth my time. There's too many opportunities in the market. You're going to have to decide what is and is not worth your time. But I want to go through this one more time. And this is for my trading view people, guys. And then we're going to get into live trading because I think this is just about it. Direction is always defined by the direction of the small triggers. If they are up, the trend is up. If they are down, the trend is down. They are decidedly up. The trend is up. I'm looking for long trades. And now, guys, this is where a simple read pays dividends. Where is the current price in relationship to the triggers? And there's only 3 options, guys. It's either going to be left of the triggers, which means in an uptrend, it's going to be above them over here. In a downtrend, it's going to be left of the triggers over here. This is the strong side. This is the good side. This is the giddy up side. This is the odds favorable momentum side. This is the holy crap, I can't wait to find an entry side. Because 1 minute areas are more likely to break. This is your big move look. This is your warm fuzzy look. And Miss Trina, on your momentum trade, that's the look that gives you the confidence to keep stops in place. Now, if you're to the right side of the triggers, below them in an uptrend, above them in a downtrend, you're on the weak side of the triggers. And from the weak side of the triggers, 1 minute areas are more likely to absolutely eat your lunch. 3 times from the weak side. That was little sound effects for effect there. From the weak side of the triggers, you're probably not getting your runners. From the weak side of the triggers, getting paid at areas. Making sure you have room to get paid at areas pays huge dividends. The moment you look at your chart and you say it's up, but I'm weak, you better expect to get paid at the first sign of trouble, guys. It sets you up for management. And then there's the transition when you're in between. You're not really strong, maybe not a huge move thing, but you're not weak. I'm not just getting out at the first sign of trouble. This is where partial profits are taken, where break even makes sense. But if you go through, and guys, I'm telling you right now, if you memorize this right here, you'll never wonder how you're going to manage your trade before you ever get into it. You're going to know what you're up against and how it needs to be approached. And then finally, just room to targets. When large and small chart has price above outer bands, can outer bands be used as support? You can do whatever you want, Paul. You can do whatever you want. Is an outer band really an area? No, it's not. Does it hold sometimes when everything is out? It does. But I'm going to go back to the very basic. Because I'm not here to tell you guys how to trade. If I were going, I'm going to bring up the trend trade rules real quick so that they're a big visual for you. Dang it, I missed part of it. There we go. So the trend trade rules say 1 minute not trading directly into areas. The trend trade rules say 1 minute not trading directly into areas. And they say buy or sell a pullback at a 1 minute area, at a zone, at a 1-to-1, or a mid band, with a close on the weak side of the small triggers. So Paul, outer band didn't make the list for the highest chance of success. However, if you wanted to take a shot, because when you're outside and in those extremes, sometimes it works, sometimes it doesn't. I don't have a percentage, but it's not so likely to create the bounce and give you your trend trade. It didn't make the list in the rules. So I see some of you take it from it, and I see some of you just avoid it, and that's a choice that you have to make. I don't teach it as an area, but what's cool is just below it there's an area, and that seems to happen a lot. So we'll see what happens. We will see what happens. All right, guys. So that's all the pictures. So that's where I ask, is everybody good? And let's do it together real quick. What direction is my trend? Guys, work with me here. Play with me. Don't make me just talk to myself all day. Is the market going up or down? Based on the small trigger direction, what do you guys think? And I can out-awkward silence all of you, just so you know. It's up, it's up, it's up, it's up. I love it. All right, I'm going to show you a trick. This helped me. I do this mentally. If you can't do it mentally yet, feel free to draw lines. Those are my small triggers. Am I strong side, transition, or weak side? Strong side, absolutely. So check it out. It's up. Let's talk about what it means to us. To me, it means only longs. I want to trade with the trend. And now it's strong side. What does that mean? Bigger moves and 1 minute likely to break areas. Now, from where the market is trading, do I have room to trouble? And the only trouble I see is all the way up here at those 1-to-1s. What do you guys think? Is there room? Yes. Go look for an entry. That's it. Go look for an entry. That was horrible. I swear I can spell. All right, so the entry rules say the moment the small triggers roll, I need a pullback. And that pullback has to be to a zone, to a midband, to a 1-to-1, to a zone, to a 1-to-1. Guys, there's a lot of opportunities there. But I'm not just jumping in. So rule number 3 says, pull back to an area, close on weak side of triggers. We just covered that. I don't consider it a zone. It didn't make the list, Victor. Zone, 1-to-1, or a midband. So here we go. It's up. It's strong. The trigger's rolled. And guys, I know exactly where my trade has to come from before it ever gets there. So now it's just a waiting game. Does that make sense, everybody? Give me a Y in the room if you're with me. First it's up, then it's strong. There's room to trouble. Because the small triggers roll, my job is to wait for a pullback to a mid-band, to a zone, or a 1-to-1, and then get a close on the correct side. So here's the million-dollar question. But Mark, what if it doesn't pull back to a zone? Is anyone wondering that right now? But Mark, what if it doesn't get to a mid-band? What if it doesn't hit a zone? What if 1-to-1s aren't reached? What does that mean for you? If your rules say that you have to go and it doesn't, there's a magical phrase in trading, guys. Not my money. Jen nailed it. And now Paul and Victor are going, oh, there's an outer band. There's an outer band. I want the outer band because I don't want to miss out on money. I don't want the market to go up without me. I'm going to change my plan in the moment to get me into the market. Guys, I've got very, very clear rules. We're going to let this one play out. So now we're just going to watch it and we're going to see what happens. You replace what if with if then. Seems to work. Amen, Ron. Trading is a flow chart. If my trend is up, well then what is my location? And if my location is strong side, then I ask if I have room. And if I have room, then I go to the small chart. I'm going to laugh if it goes off the outer band. I really am. But we're going to wait. And the rules are either going to be met or they're not. And we'll see what happens. And there are some of you willing to take it off the outer band. My rules, the rules in the KISS plan say that's not an option. So for me, I've got no stress. There's nothing for me to do right now. I could even minimize and go look at the S&P, which only has 2 triggers through fibs, divergence, not from a strong top. I don't have rules met on the S&P either. I do have momentum, but it's only potential. And we'll just see what happens. But we'll go back and we'll watch. Oh, look at that. A zone just formed. Paul, there's your damn magic zones. Guys, if you're brand new with me in this room, there's a path to getting to where you want to be. And it starts with learning some very simple rules, guys. Learn how to read your charts. Chart reading is about 90%. About 90% of your day. Being able to look at a market and say, hey, you know what? I can define the trend. I can recognize the strength. And then finally, I can define an entry. I can find an area that's likely to create a bounce to push the market and let it continue in the direction of an already established trend. And that's exactly what we're doing. Staying away from zones pays off. Amen. Doesn't have to be hard, does it, Phil? It's crazy how easy trading can be. It doesn't have to be, but we've got to kind of get over that fear of missing out. And I'm trying to coin a new phrase. I'm going to revolutionize the trading industry. The fear of being left out or feeling left out or something like that, where the market is moving with ferocity and you're not in it. And you get so anxious. I'm not in the trade. They're going without me. I'm never going to make money. Guys, the futures markets, the S&P will probably exchange about $174 million today. How much of that do you need to hit your goals? How much of that $174 million is it going to take to get you where you need to be financially? The answer for most of you is maybe 700 or 800. Somewhere around $150,000, $175,000 a year is pretty comfortable for most people. Some of you want a little more. I like you people. I want a little more too. So what if it goes up from here? And it might, guys. It might go up for a moment. It might come back down. So let's go through the read now. My large triggers are turning against me. Does everybody see that? Not the same look as it was over here. The moving averages are slowing a little bit. One of the things you'll notice too are these high volume area lines on bars. And when they open below it and they can't seem to get above it, you got to watch that. There's that zone. It keeps coming back. If I'm going to go long, that's where I want it from. I'm calling my shot. I'm demanding it. And if they don't come back, you know what? It's not my money. From the strong side of the triggers, guys, let me know if you can hear me. Sometimes, guys, you can't. And if you can't, I'll ask the room. Pablo asks, if you go long at the mid band, what's your target? The outer band? That's a great first target. From the strong side of the triggers, I like these 1-to-1s, but I'm going to keep my eyes open at the outer band, at the zone. Does that make sense, Pablo? So if I'm in around 49, this is my first sign of trouble. If I hit that, there's no way I'm giving any money back. But because I'm on the strong side, I love the idea of going up to 42. Just because you're on the strong side doesn't mean we ignore what's on the small chart, guys. That's a very important thing. Well, I'm on the strong side. I'm going to trade into areas. I'm on the strong side. I'm not worried about that. Guys, be a little worried about it. Every one of these lines can create a bounce. Good question, Pablo. Thank you. They're just dancing a little bit, aren't they? $49 to $88 is amazing. Oh my goodness. So the outer band didn't create a spectacular trend trade, filling my pockets with money. Let's see what happens, guys. Isn't that awesome? We called our shot, didn't we? And just because they get here doesn't mean we're getting in. We need a close on the weak side of those small triggers, which means when we get here, we need a minute. We got to see what happens. Are you guys with me so far? Is everybody getting it? Has anyone from 9:38 until now been like, oh, I'm never going to get paid? I'm never going to get paid. This sucks. I hate Nexgen. Mark's a butthead. Guys, I'm telling you. Is this the VWAP? It absolutely is, Phil. The volume weighted average price. The floor is lava on the VWAP. That thing loves to hold and create bounces. So how do we feel about the chances of the push down? My smalls are below the large. They're both angled down. That's a pretty good look to get me lower, isn't it? Calm, relax. It either does or it doesn't. They know it's there, right, Victor? They know it's there. They're trying to print a 1-to-1. Could you guys do this every day? Could you approach the market with the confidence of saying, I know exactly where it has to go? I know exactly what I need to see. And if it happens, I know exactly where I'm going to take profits before you ever enter the trade. If you know those things, if you believe those things, guys, trading is so stress-free. Trading becomes easy. You'll get there, Mr. Joker. What slows people down? I'm going to tell you exactly what slows people down. Trying to make money without understanding how to get there. I want to make all the money, but I can't define direction. I want to be the first one in, the last one out. I don't know what's working for me or against me. Guys, if you keep it simple and basic, if you just say, I'm going to figure out one thing at a time. I'm going to figure out direction, up and down. Most people get that pretty quick. Then I'm going to figure out momentum by where it is in relationship. And then I'm going to find one entry that makes me feel great about taking the trade, even though I'll never know if I'm going to win or lose. I'll never know if I'm going to profits or if it's going to my stop loss, but I'm going to do the same thing every day because it's been proven to create an edge. Do you guys remember Phil's picture from yesterday? 20 trend trades, 70% winners. That's not Nexgen telling you. That's a Nexgen client saying this is what I got following the plan. Will you guys give me a Y in the room? If I want to do something here. If you have followed the KISS plan for either platform and found success, give me a Y in the room. I'm going to do it. I've done it. Both platforms. Big yes. Yes. Yes, yes, yes. 1,000 times yes, right? Now here's the next question. Have you gotten too smart for the plan and lost big, even though you were successful the week before? Yes. Oh, I should have put a Y. Yes. So how many times does that have to happen until you stick to the plan? And guys, it's like the owl and the Tootsie Pop. Everybody's different. Everybody's different, but I want you to latch on to the idea that success is laid at your feet. And the only thing keeping you from it is your inability to follow a plan. And it doesn't have to be my plan. That is 99% of traders. 99% of traders. Oh no, it didn't make an area and it closed above. I better go long. Is that your highest chance of success? I don't think so. And it might go, guys. I called my shot. I know where it has to come from. If it doesn't get there, it's not mine. VWAP holding strong on the ES. Yeah. VWAP is a bad mother scratcher, Phil. And look at that. It lined up with a zone, a divergence low, almost an outer band. And look at your triggers on the ES, guys. Are they up or down? Hell, I don't know. It depends on where the tick is, right? They're flat. Only 3 things you can do in the market, guys. You can buy, you can sell, or if they're flat, you can wait. That's it. That's all you can do. There is no other options. I can't go long into areas per my plan. I can't go short into areas per my plan. So what do I need? I need it to break. I need it to get out of there. I need it to do something other than be stuck. They didn't get us. They sure tried, but they didn't get us. We'll come back. All right, here's our S&P. Smalls are up. Large are trying to turn up. Don't have triggers through resistance, which means resistance may hold. You can see it happening. Not my money. You know, everybody always says, hey, Mark, trade live. Mark, trade live. Mark, just trade live in front of the room. If they watch you trade live, they'll know. Guys, what most people get out of me trading live is that there's a lot of waiting in trading. John used to tell everybody, you're a professional waiter. You might think it's going up, right? You might think it's going down. You might believe the area should break or that the area shouldn't break. But there's an easy way to do it. 26-year-old trading veterans 10 principles. Number one is don't underestimate the power of simple stupid. I love it. I'm going to get that into my history there. I'm going to have to go watch it. The power of simple. The power of simple. Have you guys ever watched John Novak trade? John Novak will pull TradingView over here. He'll have S&P over here. He'll have over here. He'll look for edges. He'll go through, and it's amazing. It really is. To watch John Novak trade, the amount of information that he takes in a fraction of a second and has an idea of what to do, how to manage, where he's going, it's unbelievable. It really is. Large chart said it was going most likely to the one-to-ones. Small chart just didn't give it, guys. Just didn't give it. But I always tell you guys, you'll know exactly where the market is likely to go. You'll know where the market is most likely to continue. You'll know where the market is most likely to stop. And we just reached it. And now we go back to waiting for the trade. S&P did the same thing, didn't it? Right up to the divergence high. Did you guys know that the KISS plan gives you 2 trades? That's it. 2 trades. The KISS plan for TradingView, it gives you 1 trade. That's it. Did you guys know, fun fact, that on the Nexgen website, if you go to, there we go, the trading guide, there is the high probability trend trade that we talk about that builds a foundation. But there's also market flow, and there are HVA trades, and there are momentum trades. And thanks to Ron C., there's even a chili dog trade that was made up by a Nexgen person and shared in the room because it's so damn effective. Guys, everything that I do in this room, all the simplicity, all the boredom, all the do nothing, the rigid rules, we're laying a foundation for you to learn to read your indicators, because once you can read your indicators, you can say, I have this advantage. I have that advantage. This advantage is in play. And it's not to do anything other than open the door for the next trades. Does that make sense, everybody? I'm not harnessing you. What I'm doing is I'm giving you the greatest opportunity for success so that you can maintain confidence and do great things with the software. Now you have a supply and demand zone on the red. This can be an entry area. Absolutely it can. Absolutely it can. Man. So outer band didn't hold, did it? And it did come lower, and man, sometimes it just goes from the middle of nowhere. Goes back to the idea that you're not in charge. You never will be. There are men and women with more money. They're probably better looking than me, right? They create trends, they establish momentum, they react at areas. That's who I want to trade with. That's who I want to be with, guys. I want to be like, this is that big bulldog in Looney Tunes, and I'm the little chihuahua jumping on its back, just capitalizing on all the awesomeness. So Jen, you're tending to second guess yourself when it's already reached an area and it pulls back. So Jen says it's already made it. I don't want to pull back to an area inside of triggers. Is that what we're saying, Jen? I get it. So it's the same concept, right? It would have to pull to here. Okay. So if it pulls back right now to 95, all the way to right here, it would still be up, yes? It would be transition, not at all weak, but transition, which is pretty awesome. And you would have room back to trouble. Does that make sense? Not weak, but rather transition. So Jen, if you get back here, you might say, since it's hit the 1-to-1s, I won't fight odds favorable momentum. I'll let the smalls roll up and then go, right? You might say, I'm going to be a little more conservative on my entry. I'm not going to be the first one in. I'm going to force it to roll. Let's do a pen. I'm going to force my triggers to do this, and then I'll look for an entry from the zone. Instead of when there are odds favorable momentum down, these are your large triggers, that's your small triggers, right? With the separation, I'm not going to just get it hoping that shit stops. I'm going to force it to roll in the direction of my trade because, Jen, these are 15-minute bars. I mean, look at this one from the VWAP all the way to the zone, right? And then it pulls back, and then it breaks the zone, and then it pulls back, and who knows what's going to happen. So I try to lean on, are my rules met? But just like Jen said, because it's reached 1-to-1s, I may have my guard up a little bit. I might force it to be a little more conservative, a little less fight. You comfortable with that, Jen? No worries. So I think that we forget a lot of the time, guys, that we're in control, right? So I'm gonna do one more picture. Whoops. So we're going to use our imagination. Large charts up. It's transition. Room back to trouble. Perfect entry. I choose not to take it. Jen, it's your right to not take that entry because it's already hit the zone, right? It's your right to just sit on your hands and do nothing. But here's the part that most people can't do. Here's the second part. I chose not to enter. It went up. Grrr, I'm going to go kick the dog. I knew it was going to go up. I wasn't comfortable, but now I'm mad because I missed it. So if you make the choice not to follow your rules, you can't get mad about the outcome. If you make the choice to follow your rules, you can't get mad about the outcome. So this is where plans change, right? The KISS plan is super black and white. If then. If the 15 minutes not trading directly into something, if the 1 minute's not trading directly into something, buy or sell a close. That's the KISS plan. That is the I'm on simulator, I'm learning to read my indicators, take them all, we'll sort them out. Jen's plan may say 15-minute has not reached or is not trading directly into zones, right? And now there's the Jen addendum, where Jen says, I'm not comfortable trading into it. I'm going to write my plan to reflect that I don't want to take that trade. Does that make sense, Jen? So guys, if you're very basic, if you're 100% doing it per the KISS plan, if it pulls back to this area and gives you a close on the correct side, guess what? That's your trade. Take it, manage it. That's a lot of distance. We'll see if it sets up. And Jen, that's one of the things about trading, that as you begin to see more, you begin to think a little differently. As you begin to recognize things, you begin to think a little differently. As you begin to see more patterns, you may see things a little differently. And that's going to adjust your plan, guys. My hope for all of you is that through study, simulation, class feedback, and practice, you will write a plan that suits your needs. And well, Jen, the more you see, you get brain bing bongs. I like that. What most people will do, and I'm not trying to generalize, but I'm going to generalize. Most people will follow a very simple plan in the beginning because they're told over and over, this plan, this entry will optimize your chances of success. It'll teach you to read your indicators. And then what happens is when you learn to read your indicators, let me do this real quick. When you learn to read your indicators, you know that this is the recipe for success. But you start incorporating but, and you start incorporating should, and you start incorporating might, and you begin to interject your opinion based on your chart read. Has anyone other than me done that? I know that it's into a termination condition, but it should win, it should break, and I might make money, so I'm going to ditch my checklist and go with what I hope happens, not what my indicators say are happening. Guys, that's a super normal progression. And that is where I asked people earlier, has anyone ever followed the plan and found great success and then ditched the plan and gotten their asses kicked? It's because you stopped doing what's bringing you success. That's the downfall of traders. It's not an inability to read indicators, guys. Most of you can do it as well as I can. It's not a lack of a plan. Everybody has access to the plan. It's the human desire to be busy, 30 days stupid, to abandon what's brought you success because you're smarter than that. It turns out nobody is. And that's the crazy part about trading, guys. I would love to just do like a 3-day seminar on psychology. I think that would be amazing. What I've seen teaching people over the last 5.5, 6 years, however long it's been, because nobody's different in this room. Apex mentality is going to do the same stuff as James, who's going to do the same stuff as Ron, who's going to do the same stuff as Z Robot, who's doing what Pablo does, while Spartacus 50 is doing it as well. And guys, it's human nature. And it's okay. You've got to embrace that, but you got to remember that trading isn't a definitive outcome. Trading is probabilities. And when you do the same thing every time, you can create expectations for your results. And you're still going to make mistakes, guys. I don't care how rigid you are. You're going to make mistakes. We all do. We're human. That's okay, right? Give yourself a little bit of permission. It's, who was it? There was a golfer that said every round they expect to hit 6 bad shots. I don't remember who it was. John talks about it. Every round, before they ever go out there, they say, I'm going to F it up 6 times. But I'm going to make sure that the other 64 shots are what they should be. And guys, that's a great thing on trading. Merritt Black, who used to run the futures desk at SMB, said, no human I've trained is a natural born trader. It's counterintuitive, Phil. Sitting still is counterintuitive, especially all of us that are in our 50s, 60s, some of you in your 70s. The harder you work, the more you make. The harder you work, the further you go. The harder you work in your 30s, Jen, not all of us can be young and beautiful. But the harder you work, the further you get, right? My dad told me when I was 15, he goes, I don't care if you're a ditch digger. If you are the best ditch digger, you won't be a ditch digger for long. Work hard. And it's just, that's our mentality. And trading is very counterintuitive, guys. You've got to sit on your hands. So right now, just know where to go. Nothing to do. What's the S&P say? Nowhere to go. Nothing to do. So I'm going to take a minute to walk around and go stretch my legs and pet my dog. And who knows, maybe refill my water. Guys, do the same thing. I'll be back in about 5 minutes or so. Throw questions in, throw charts in. The fact that nobody's posting charts is just reaffirming the idea that you don't have to be active all the time. There was some nice movement in the morning, and now they're just trying to figure things out. They will. They always do. I'll see you in 5 minutes, guys. All right, guys. Did you miss me? I'm back. Oops, I didn't mute YouTube. Probably hear me chewing on pistachios. Guys, I don't have momentum. I got nowhere to go. I can't go up. I can't go down. I'm going to sit on my hands. Here's our pullback. All right. So Jen says, I get nervous when it hits and doesn't break. Now it's done it twice. Do you guys see it? And an entry down at the mid-band comes from the weak side of the triggers. So Jen, they've already hit, they bounced, they've retested, and now they're coming back. Would we get our guard up a little bit on a trend trade long here, guys? We certainly could, but if the rules are met, we're going to take it. We'll manage it. We'll see what happens, right? Triggers are up, currently in transition. Back at my areas, do you guys see the little line there? I love how the lines come across. I will be weak side of the triggers, which means I'll just have to manage. Take them all, right? I'm on simulator. Take them all. Annotate them. Talk about them. Get feedback on them. Mark, this is what I saw. This is what I did. This is where I did it. How did I do? Right? That's it. That's all it is. Crude oil, same thing. I have momentum down. I've got nowhere to go. And since I have nowhere to go, my rules say I don't have a trade. That's it. Didn't pull back to an area. Don't have a trade. Some of you are saying, wait a minute, from the termination, small's below the large, high volume area. Let's see if it pushes down from here. We'll see if that's the spot that it needed. Guys, I need you to talk to me. What can I do for you? This is why, despite people always saying, man, if you would just trade live, man, Mark, if you would just trade live, I would learn. I disagree wholeheartedly. Trading live, it requires us sitting still and doing nothing, right? Being quiet. You could watch me trade live all day long and not learn a thing, guys. So we're gonna do some lessons. The path to getting to where you want to be. Learn the rules, guys. Learn the rules. Take the time to learn the rules. There's only 3 for NinjaTrader. Strong trigger lines. Gives the advantage of momentum. Guys, if you don't know what strong triggers look like, how are you ever going to get it? Right? The KISS plan keeps you from over trading. Me too, Claire. Oops, close that. To trade live successfully, you need to be bored most of the time. Ron C., I'm going to get that sewn into a doily or something. Guys, this spreadsheet right here would be enough. That's it, Pete. Nothing to do. Strong triggers. 50 pictures annotated of what it means to have rule number 1 met. Clear path. 19 pictures or 18, 17 pictures showing you exactly what it means to have a clear path. Entry. Pictures showing you exactly how to define your entry. Guys, a trade isn't anything more than strong triggers, clear path, and entry. If you learn these 3 concepts, and I'm talking to you people that are brand new, that are learning, that are trying to get over that hump and become a trader, learn the process that yields results. And if you're going to learn what it means to have your rules met, right? I will take a trade if I have momentum, clear path, and entry. You got to know what it means to not have your rules met. I refuse to take a trade with weak triggers. I'm desolate about taking a trade into a termination condition. If I can't define my entry, I choose not to take the trade. Guys, trading can be very black and white. So learn those very basics. You use those spreadsheets. Oh, gee, I think they're worth their weight in gold. I really do. So you've got to learn the rules. And then once you learn the rules, you got to go through the process of trusting the rules. You've got to simulate. The thing that sets Nexgen apart, in my opinion, is yes, we have a million videos. Yes, we have a million documents. But guys, every day, you can take a trade. You can post it in the room and you can say, Mark, let's have a discussion. Give me a private session right here in front of 37 other people. Did I read momentum correctly? What do you guys think? If you were doing the feedback on this chart, momentum, strong triggers, it's true, right? Because strength is always separation. Termination conditions, what did you see? Well, I saw that this had the potential to break, but I knew that it wasn't broken. You're only up to 99 and counting to a million. I love it. Entry, pull back to an area inside of triggers. Guys, this is the perfect trade. From the perfect conditions with the advantages that you need to feel comfortable about taking the entry. That's it. And because you take pictures, because you annotate, you now have a recipe, not only what it says on paper, but what it looks like to take the perfect trade. Laid off twice because not enough room in the zone. Worked out for you, didn't it, Phil? Worked out. Now here's, can I play devil's advocate? You've got to go through not doing, that's a swear word. I could have made 4 ticks 3 times, right? 4 times. Or Carn Sarnet. I knew it was going to go up to there and then come down, right? All right, so triggers are up, right? You guys see it? Weak side of the triggers. Blew through the midband in the zone. Thank goodness our rules say close on the correct side of the triggers. Pretty awesome, right? Divergence isn't an area. HVA lines aren't an area. Did anybody jump in at the midband thinking it finally made it, I'm going to take it and get slaughtered? That's where my Renko users fall short typically, is they get in at the area and not with the close on the correct side. Jen, second test. Odds favorable. No close. Pretty cool, right? Rules for the win, guys. And now we're in a holding pattern. Let's see what happens. I don't have an area to trade from long. Getting back inside of the outer bands. My triggers are trying to roll. Look at that. I love this stuff. Momentum shift on the 15-minute ES. Yep, triggers are down. Strong side of the triggers. We've tested the midband. If we got a pullback, would we have room to trouble? I think so, from somewhere around 43. So if it pulls back, VWAP zone gives me a close. I may have room to make a little money, Phil. We'll see what happens. Don't have the same shift on the NASDAQ yet. Crude oil says you got nowhere to go. S&P had the huge drop, right? Weak triggers at an area, pushing up. This is grade A baloney. How am I ever going to make money on a high probability trend trade only? Pete says, well, when you've got momentum and nothing in the way, Pete got in at, well, Pete likes to jump in soon. Pete got in at 44.50. He took 10 ticks, and his second one came off at 40. Let's see. Let's see if I'm right. I feel good about my chances. 3 divergences in the same price range. Could terminate a trend. Still nothing to do there. We'll watch the S&P. All right, NASDAQ triggers are still up. S&P triggers are very much down. Don't have a long trade. Too soon for a short trade per the plan. Let's relax. Did anybody catch that move in the S&P? I got you, Miss Trina. Trina asks, how do I turn on my trade entry exit positions? So down here, see the little hexagonal? It's like a nut. Click it. Go to more settings. And then trading. And you're going to want to do, where did it go? Execution marks. And one of the things I like to do, Trina, is the order and position alignment. I like to either do it center or left so I can see the price bars when they're in there. Sometimes that's comfortable for people. Directly into one-to-ones, none of the triggers broke, and it didn't keep going up. NASDAQ's trying to roll. We'll see if it does. S&P, termination, larger down, smaller down, zing pow, right? Where's our next trouble? I don't have momentum yet. I do have a clear path. I could define an entry. You could call this a medium probability scenario. It doesn't fit my plan, guys, but if this market's going to bounce down, we probably just got to the point to where it's most likely to happen. We'll come back and check on it. That one doesn't fit the KISS plan. Ha, Pete, in early. I knew it. Directly into trouble. But Pete says that's enough room to make money. I'll get paid at 10 ticks. Lost the momentum. Nicely done, Pete. And OG, I love it. OG says, Mark, that's not a good trade because price is on the wrong side of the triggers. Let's change our language, OG. You want to do a little language changing? You're going to love this. Guys, remember when I said I'm not here to stifle you or keep you from trading? So OG, the perfect trade is momentum, clear path, and entry, right? Can we agree that the momentum is not there? Smalls are on the wrong side of the large. Does that make sense, everybody? Perfect. Do you have a clear path, OG? All triggers below, room? Do you see it? Do you have an area inside of triggers? Yes. So if I have 2/3 of my advantages, this is how you guys are going to grow. If I have 2/3 of my advantages, I can say that this is a medium probability trade. I can say, I'll take this trade And if something changes, I'll manage it. Divergence would be a good indication of change. So very often, guys, you'll be able to take that recipe for the very basic, that idea that momentum path and entry creates the perfect trade, and from that recipe, it's going to open the doors for more trades. So OG, you're right. That was not a high probability trend trade. But for a lot of people, that was a very good trade. And if they got in at 37 and it went all the way down to 34.50, well, it went all the way down to 33. So that's 3.25 points. There's some money to be made there and room to manage if it doesn't go. And now there's just trying to figure it out. I've got momentum up, but none of my triggers above. Trend is up, momentum is up, path is not clear. Area inside of triggers. Could you play the 2 out of 3 again? You could. Take and manage. That's my brother's battle cry. Take and manage. If you see more good than bad, take and manage. That's where everybody's headed. The problem is most of us in the beginning can't decipher the good from the bad fast enough to be effective. That's where the KISS plan keeps you focused on the best of the best. Triggers are up. Pull back to the zone. There's your close above triggers at 58. Room to trouble. Not much. We'll see where it ends up going. All right, Phil, let's see what you did. Triggers are down. Weak side of the triggers. Room to trouble. Pull back to the zone. Close below. You get in. Looking to take profits, looking to take profits, looking to take profits, and very little risk on that trade as it gets into trouble. Nicely done, Phil. Is it perfect? No, nothing's ever perfect, is it? Didn't quite get the close below, and you said, well, that's my spot, that's my reversal bar. I'm a fraction of a tick off. I'm going to take it and manage it. I like everything about it. Great job. There's your outer band, right? That can be an area of resistance. If you took the trade from 58, was that 58? 58. It went up 13 points with the trigger still up. We're just going to see what happens real quick. Triggers are flat now. There's no doubt about it. Triggers are flat. It's coming from a termination, not a lot of room to the outer band. Right there around 71, 72. It hit it. And now we're dancing. Lost your dynamic support, is it? Do F5. Phil, if they're in the, like if they're on there, they're just not working, F5. Ta-da! From the weak side of the triggers, there's your trouble. That's an 18-point trade, ladies and gentlemen. Did anybody take it, or did everybody form opinions? Let's go through it. Up or down, guys? Small triggers. What do you think? I'll say flat, but they've never gone down, right, Trina? So until they go down, they're still up. Strong side, transition side, or weak side? What do you guys think? Weak. What does that mean? Get paid at trouble? Does that make sense, everybody? Was there room to trouble from a close on the correct side of the small triggers? Did it make it to trouble from a close on the correct side of the small triggers? Could you defend this trade in a court of law? Could you say, this fit my rules 100%, I managed it per the plan, Your Honor? Now, how many of you said, but it already, because I won't, can't do it, not mine, blah, blah, blah. Guys, until you get to where you want to be, if the rules are met, take the trade. These are 15-minute bars. If the rules are met, take the trade. And then go through this. It was up. It was weak. I had room to trouble. Talk about this. Close on correct side with room to trouble. My opinions mean squat. Triggers up. Price on the weak side. Manage aggressively. Space to the next area. Small chart price, close on correct side, did not feel like it was going to move, so I took 350. Did not feel. I dated a girl once. You know what she said? F your feelings. How did your feelings serve you, Victor? How did your gut treat you on that one? Your gut said, Victor, just follow the plan. Be willing to lose. Be willing to win. Not a trend trade. Counter trend trade really shouldn't work trade. Never saw this trade until I learned the high probability trend trade. With this look, price tends to retrace to the white reversal bar on the large chart. Not a home run, but base hits pay bills. So termination, divergence prints, take the entry. And Ron, the one thing that you never fail to do is let the small triggers turn in the direction of your trade. I've noticed that. No divergence, no entry. Divergence, entry, smalls down. Easy peasy, man. Ron's got two trades. There's this trade and there's the chili dog. And if you go through his last 500 posts, it's the same one. Doesn't seem to matter on this one. Termination on the large chart. Reversal bar, divergence, go. John Novak's working out a plan right now that utilizes both NinjaTrader and TradingView, doing the exact same thing. It's the exact same trade, bigger moves. Into another zone, no go. You got a lot of zones, right? Phil, it's frustrating some days. And when the market's been consolidating, you're going to see it. There's your close above, directly in, gives a bounce. And it's just, man, brick walls after brick walls. Whoa, it just kept going. So is anybody wondering, why does Mark teach us to trade with the small triggers on the large chart? Has anyone figured it out yet? No, you shouldn't have. Well, yeah, you should have. You jumped out in the middle of nowhere because you got in your feels, right? But from 58 to wherever that zone was, holy crap. Guys, that's a whole day's worth of trading. And it took us 2 hours to get to it, didn't it? But it happened. Man, I don't forget things, Victor. It annoys the hell out of my wife. So what are the triggers saying right now, ladies and gentlemen? Up or down? They're up. Are we strong, transition, or weak? weak. Do I have areas where if the market pulls back and I get a close on the correct side of the triggers, I am obligated by my plan to enter that market? What do you think? You're on the ES? We'll wave at you. Man, Phil, what's the difference between the NASDAQ and ES? The ES is full of zones and the NASDAQ isn't. It's still a 15-minute bar, right? It's still a 1-minute bar. It's still the same rules. I'm not telling you what to trade, Phil, but I think what you'll find is that the NASDAQ is just as easy to trade as the S&P on TradingView. Not true on NinjaTrader because of the speed. Andy, everything is screaming up. You jump the fudge in, and you make a lot of money with momentum and path. Absolutely beautiful. Absolutely beautiful, Andy. You picking it up? Life's a garden, Phil. Dig it. But I think that's the one thing is when I talk NinjaTrader, guys, I'm like, oh, he gads and little fishes. If you're brand new, the NASDAQ on NinjaTrader is freaking hard. It is fast. Let me pull it up real quick. If you're on TradingView, a minute bar is a minute bar, right? You still have to wait for the close on the correct side. A minute doesn't happen any faster on the NASDAQ than it does on the S&P. Was that a pretty good lesson on don't form opinions? Hey, Phil, you pointed this out earlier today. Did you see that VWAP? Oh, love the VWAP. That would have made me feel even better about that long. We as humans tend to overcomplicate things. Certain keys aren't annotating. Mine are wearing out. I'm thankful that I know the home row and don't have to look at my fingers to type. That is a good lesson on the VWAP. I refuse to trade into it, Phil. I'm not afraid to trade from it, especially if my rules are met. And that was damn near the perfect trade. Look at those triggers. And Trina, this is where I go back. They were flat in the moment, but that's that little flip-flop again, right? They are up. I tell you guys, if you can't tell which way and you can't piece a trade together, you don't have to guess. But until they roll, and let's see if we can find like a big picture. I'm gonna see if I can find, that's where triggers, holy crap, I just can't tell. You would just wait till clear, and that's fine. I like that. Trina says I don't have to be in every move. That's not my job. Good stuff, guys. Is anyone bored out of their skull waiting for Mark to take a trade? Strong trending market. This is one of the challenges, guys, when I'm going back and forth between NinjaTrader and lessons. We missed the perfect long. We went back and talked about it, right? But it means that we have to sit here and do nothing. That's what trading is, sitting here and doing nothing. That one trade is my daily goal, my daily profit. Easy. $500 a day, guys. You'll never work a day in your life. Copy it on five accounts. You'll never work a day in your life. You'll be in your pajamas. Your cat will be on the desk. Your dog will be curled up at your feet. And you'll have a tea time to go play. All right, look at us. We're breaking, right? You guys want to see something cool? The triggers have been up since 9 a.m. Has anybody lost a short trade? Maybe not. Did you guys know that there's a lot of opportunity even not trading? But it's so easy if you trade with it. Beautiful business plan, right? So Sergio, Nexgen Pro Trader funding. Whoops. How do I set targets to take off the first contracts in the trade? I'll show you. Claire's asking, Mark, how do I do multiple contracts? So Claire, we're in 4. How many do you trade? 2? We'll do 2. So if I just jump in, Claire, I'm in 2 contracts. I'm going to put my stop loss where it shouldn't get hit, just for the sake of the lesson. I'm going to put my profit target where it shouldn't get hit, just for the sake of the lesson. If I want to take a partial, I have to reduce my contract quantity to 1. And then I'll just right click and I will sell 1 because I bought 2. And if the market comes up and hits my profit, and obviously this is not a real trade, guys. If it hits my first profit, Claire, and I'll just make it happen, bonk, it'll take 1 off and it'll automatically adjust the other 2 to 1. Now, if you're on a trade account, it won't do that. It won't manually adjust. But that's really all there is to it. And then if you want to exit a trade, you just X out. So it works for any amount, right? If you go long 10 and your profit's off in the distance and your stop loss is way down here, you could say, I'll pull it down to 2s, right? I'm going to take 2 off here. I'm going to take 2 off here. I'm going to take 2 off here. And I'm just going to keep doing it. So if it takes my first 2, and I don't know if it's going to, then it'll go through and it'll pull it out. Does that make sense, Claire? So you're going to put limit orders, and then if it hits your stop, you're going to have to go through and cancel out whatever limit orders you put in. Awesome. Adam P. Let's see what we're doing. Manual entry, strong triggers, clear path, good stuff. All right, so here's the challenge. Two triggers past, Alan, is a large chart. Look, this is divergence right from a fib. It's not a bad looking entry. It's really not. The divergence coming from the Fibonacci area is a little bit of a red flag. The entry is absolutely perfect. The only thing that I might say is you could manage this. Do you remember the lesson on fighting the small triggers, Adam? Was that you that we talked about it on? In a situation like this, I might wait for the close on the correct side, and then once it happens, it's directly into all the trouble in the world. What happened after? So let's go look after. I think this is such an important thing. What time was that trade? Probably somewhere. Let me look at it again real quick. I want to see what happened after. 8:45. Are you on Central? Are you on Eastern? Adam, help me out. Man, the NASDAQ moves a lot. There we go. That was it right there. You're on Eastern. Cool. So I want to see, man, guys, NASDAQ moves a lot. So there it was right there. And it just railed right down, didn't it? That would be the fighting the small triggers. And I think that using the idea of where the market shouldn't go might have helped a little bit. Turn it into a smaller loss if you were going to get in at the area. You could give it a little bit of room below, but once you get below everything, you don't know if, when, or where. So divergence from the fib was your first red flag. Fighting the small triggers. It's the perfect large chart look. It's the perfect area inside of triggers. You use the reversal bar for stop. It just didn't work, man. That's it. It just didn't work. I don't think I could really find anything wrong with this trade. I could go through and pick it apart, but in the moment, you really had pretty much everything that you could hope for. Down, momentum, room to trouble. More of a momentum style trade. No divergence. No, I think you're good, Adam. Let's talk about the midband real quick. And we'll use your picture to do it. When is the midband a termination condition? When the large triggers are a full bar away. Do you see that? How price pulls back, hits the midband, and it snaps right back up to those triggers that are a full bar away. There's room for an entire reversal bar. That's when the midband is detrimental to success. When you're right on it, the large triggers are real close. I love that look. And then it pulls right back all the areas. Small triggers don't follow. And it's really just more of a momentum style trade, which is absolutely perfect. Does that make sense? You had room to trouble, pulls back to the EMA. Yeah, and the midband isn't a big concern in this look because the large triggers are not a full bar away. That's the most forgotten termination condition. And I don't know why I'm going through, but I want to just show it. Large sharp midband, if the large triggers are greater than a full bar away, that's the only time that midband ends up on my radar. All right. And now this one, 2 triggers through. Pull back to the area. I like it. You ended up getting stopped out for a $45 loss. Did you get another divergence? I mean, perfect entry, didn't go beyond the triggers, and it just kind of bounces back up. And that's that 50-50 look. So $45, it's a good look. Weak top, only 2 triggers through. And do you see how with divergence, they're already reacting at the area? They're already saying the fight is on. The buyers are in it. They're pushing. They're creating some friction. On this look, divergence is one of the biggest killers. It's one of the biggest indications that it may not work. Your entry is perfect, 100%. And getting out with a $45 loss is, I think, really good management on that one. Because these divergences said that it's going to struggle a little bit, especially from a bad top. I would take that look. That's the perfect entry with all the momentum. And that's the look that typically makes things break. Pretty outstanding trade. Just didn't do it. And you just kept going down with the reversal bar marker. Right on. Does that all make sense, Adam? The market's just, it's been bouncing a little bit. I think you did a great job on the management there. There's a momentum style entry that is a pullback to an area at those small triggers. On this one, you're running a little bit tight. I might have been willing to take the loss above the pivot. And again, what did it do after? Did it continue down? Or did it bounce up? There's the one that went down. There's the pop down. And now they're trying to get through those areas. Tight management makes sense. I like to see, I always go back and I like to look at what the after was. Yeah, see, I had a big fib there. I want to see what it looked like on my chart. It's amazing how much this market moves. Rinko shows a lot more than minutes, for sure. Did I miss it? Not yet. See, I did get a second higher divergence. Adam, I don't know if you did, but 1, 2, 3 divergences on that potential to break, that was your killer. So great management. Great management on that one. Had the potential to break. That second higher divergence tells me, nope, Mark, not going to happen. So I think you did it about as well as you could have done it. There's all the momentum, 3 triggers through, pull back to the area. Your system may not have given an entry without divergence off the low. Switch tabs wasn't live. Let's see what you did. Up, weak side, pull back to the area, close on the correct side. First profits at trouble, nothing to lose. Beautiful trade, Claire. Beautiful trade. It fits the rules 100%. Fits the rules 100%. Pete, strong trending market. Pull back to the fib, to the mid band, catch it on the way up. Giddy up, take 10, get out because it's not perfect. I love it. Great trade, Pete. Ron says everybody does it. Yeah, but you'll go blind. Strong trending market, in above trouble, and it just doesn't work. And sometimes they don't work. Everyone takes losers. Amen. Everyone takes losers. It still makes you a little mad. Losers happen. All right, Miss Trina. Down, strong, momentum. You took the momentum style trade, and it doesn't work. And then entry 2, you take the don't have momentum. So you let it pull back, and then as it's heading down off of the area, it does work. Right on. Down strong leads the way. Doesn't work, continues down. Same entry, HVA, not momentum. Does work, continues down. And it's all predicated on the strong side of those triggers. Nicely done. And then triggers down, strong, transition, pulls back to the area, closes below. Nicely done. Right at the outer band. I love it, Trina. Good job holding. Good job holding. No opinions, just targets. Trust. It takes a while. It takes a while to build trust. All right. Clear path, breaks the area. No areas inside of triggers. Nice entry, nice exit. Hope in the mid-band holds. Z-Robot. That's the only thing I can get you on. Simple base hit, short trade. I don't know if that is a base hit. That's more of a grand slam. Everything says down and there's nothing in the way, and it pulls right back to trouble with every indicator below it. You get in right at the mid-band. What would you have done, Z-Robot, if it had gone to the large chart mid-band? Where was your stop from the wrong side of the triggers? You don't even have to answer, but I want you guys to think about that. Where does my stop go if I don't have triggers to define the retracement zone? How much are you willing to put on the trade? You have to answer that question. Does that make sense, Z-Robot? And everybody's got a different answer. I think Pete usually does 7 or 8 ticks. He's totally willing to do it with this look. You say very small and work the exit. That's not a plan, right? Very small and work the exit. What is very small to you? John Novak thinks very small is hundreds of dollars. Some people in this room think very small is a couple ticks. You guys hate it when I do this, but this is trading. No, it wasn't a couple ticks or it would have gotten you. From this entry, what do you deem safe? You moved it based on the chart. Which chart? Okay. So you put it behind the one-to-ones. How far? Two ticks above the one-to-ones. Okay. So you could define your management. That's all I'm asking. That's all I'm asking, guys. When you get in on the wrong side of the triggers, how do you define what's acceptable risk? I think 2 ticks on the NASDAQ is super tight, personally. But you had a plan. You said, okay, I'm expecting the large chart area to hold. I'm going to use the mid-band. And if it gets too far past where I expect it to hold, I'll take an exit. I love it. And guys, there's going to be times. Did you notice that you didn't say any of that, right? You just said entry, exit. Momentum broke. So is it a real plan? Is it a repeatable plan? Is it a defined plan? And you don't have to answer, Z-Robot. I'm not trying to put you on the spot. But guys, every time you take a trade, you have to know how you're going to manage it. Because if you don't, what comes into play? Your guts. Your guts come into play. And guys, our guts suck. Maybe not even luck, right? They're still up. 62. I've got plenty of room if I get a close above, but I got to close above those one-to-ones as well. Odds favorable down. It's the 5th hit. Didn't get it. So when I talk about these things, guys, when I talk about the idea that you can know exactly why you're entering a trade, I think naming your trades creates a huge advantage. So name your trades. It means you know the exact rules to enter, right? The advantages, the management plan that goes with it, all of those things. And it keeps you aware and when you're managing. So if you're in a high probability, you know exactly how you'll exit. And if you're in a 50-50, you know exactly how you'll exit. Momentum, HVA, trend trade, where I'm at in relation to the triggers. Guys, get in the habit of doing that. Like before you ever pull the trigger, start working through management based on what you did. And Z-Robot, that's what you did. You said, because this area is likely to hold, my management will be there. And if it continues down, I'm getting out at the next sign of trouble. You had a management plan in place, which means you're not subject to your emotions. Good stuff. Adam P. asks, when learning in the beginning, am I better off trading with 2 contracts or 1? I think keep it simple. Adam P., don't give trading advice. I like trading with 2 contracts in the beginning, and I'm going to tell you why. And you may identify with this and you may not, but the majority of traders that I work with don't know how to get paid. So the management plan that I've got based on 2 contracts, and this isn't for NASDAQ, it has a very reachable, if you're following the rules, a very reachable first target. Make $100. Learn how to get $100 in the bank. And what happens is there's this sigh of relief. Oh, I'm paid. And then it says go break even. So you have nothing to lose. And then Adam, your second contract is where you learn how to really manage. The first one takes the pucker factor out because you get paid. The second one is where you let your indicators tell you where to take that exit ultimately. Does that make sense? So if I'm on simulator and I'm only trading one contract, I'm out and I'm done. But if I'm at two contracts, I can get out with a little bit in the bank. And then I can say, but my large chart says I'm probably going here. I'm going to put my target there. Let's see if it gets there. Does that make sense? That's a good question. But again, you're trading outside of the KISS plan, so you're going to have to decide what your targets, what makes sense. But I love the idea. Get paid, get to break even, and see what happens. And then go back and take a picture, right? Get in. Because of the momentum, the entry is at 68.41. 68.41. Nothing in the way on the large chart. Gets in above trouble on the small chart. Out at trouble. Out at trouble. Waits for trouble to break. In. Out. Out. That second contract. Let it run. Nice one, Pete. Let it run. See what it does, right? Trend trade triggers up, price in transition, space to the next area. Yellow 1-to-1s, close above, prairie dog, right into trouble. So Victor, oh, I'm sorry, Sergio. I got you. You need to buy a copier. That's it. You need to buy a copier that works with your broker. A lot of people use Replicanto. There's others available. You'd want to do your research. But there are copiers that you can latch onto your SIM account, and they will copy to 4 or 5 other accounts doing exactly what you do. I don't use one. And I don't have any experience with the aftermarket ones. Nexgen has one for TradingView if you're in the funding company. But I know that there's free versions as well. There's NinjaScript that's written out there. I don't think I have it on this computer. And Victor, we're going to come back and talk about yours, but I skipped him and I'm sorry. Trade copiers. Forex Solutions, Traders Connect, Social Trader Tools, Affordable Indicators. And again, Sergio, I'm not making a recommendation at all. But there's so many. Replicanto is the one that I see a lot of people using. I would look at it, make decisions. But there's a lot of them out there. You just need to go find which one works for you. I don't have a lot of experience with them. All right, Victor. Up, transition, in at 56. So what happened? You're into the zone, right? It can't be a momentum trade. There's not a lot. I did. I commented on it, Pete. I said everything about it. I described the momentum, your clear path on the large chart. You're getting in, you're taking exits. You're waiting for it to break, getting back in, out with momentum loss. I covered all of it. Do you need me to cover it again? I will. I got you if you need me to, for sure. I do that sometimes. So Victor, I love that you got paid. I would ask why. Why prairie dog, right? Why quick profits? Something wasn't right with this trade for you to get out arbitrarily at 61.75. That's the I'm tired of waiting trade, right? If your entry is at 24 and, if the area you're trading from is at 24 and you're entering at 56, $600 difference. Maybe not the best trade. It's your trade. I'm not knocking it. Not what I'm used to seeing from you. Hey, Z Robot, will you do me a favor? And this is just for me. And I'm not sure how you're taking pictures. Will you lose some of it so it's easier to read? Just get rid of the 3 hours before your trade. There's so much information on these charts that I don't need. And because I can't adjust your sizes at all, it just makes it a little easier. So odds favorable momentum, perfect. 3 triggers through, awesome. Pull back to the area inside of triggers, brilliant. No. You say better entry at the mid band? No. With all of that momentum, Z-Robot, the rules say get in low, right? Get in at the first area inside of triggers. Be willing to let it go to the next one. This is the perfect entry with the perfect conditions. Beautiful exit. And then when you get the loss of momentum, you're out. This is the perfect trade. 100% rock star. From 45 to 31, yeah. Does that make sense on the entry? The rules say get in at the area closest because that is screaming down. You don't want to miss it. Nothing worse than tripping over pennies to make a couple bucks. Really great trade. You didn't know that? You should watch my first hour. You did it really well, man. Nice job. Andy Man, 3 through trouble. Perfect entry. Didn't take, didn't take, didn't take. It's the perfect trade. Beautiful, Andy. Sometimes annotating's just as good, right? Just cementing the idea that you do know your rules. Morgan says he uses Replicano. If the market is moving fast, it can miss stuff. Momentum shift on the NASDAQ, absolutely. Never gave you a long entry. Didn't clear the previous divergence on the 14.2, Andy? Why? That was your entry. Why didn't you just take the perfect trend trade? That would be the question I'm asking. That's your entry. That's your management opportunity. You guys that are waiting for it to clear stuff to jump in are missing a lot of good trades. That was the perfect trend trade. Nicely done, Andy. Good patience if it doesn't fit your rules. But I think you guys forego the trend trade sometimes, hoping for the jump-in trades. No, it didn't turn into a bear trap. It was the perfect trend trade from 95, and it went all the way down to 83. Perfect entry, low risk, more than enough time to manage it when the pivot stop out happens. I mean, holy smokes. That was the mother lode. I disagree on the bear trap comment. Looking for a pullback to the zone. Very favorable 15. Anticipate before you participate. I love it. And then from 600, you want to make sure that it's that low end and it gives you room back to the VWAP, right, Phil? Yes, sir. And who knows, it may just blow through. We'll see. It's a perfect read. Calling your shots. This is what has to happen to get me in the market. If it doesn't happen, it's not my trade. How are we doing today? Uh-oh, Ninja Trader crashed. Stupid Ninja Trader. You're making me look bad. How are we feeling about the day? There's a lot of doing nothing in trading, right? But so far, everyone that's fit the rules, I haven't seen a loser yet. Not to say that you won't take losers, but I haven't seen one yet that fits the rules. Has anyone? Correct me if I'm wrong, please. Have any of the trades that we've talked about that fit the rules become a loser? I have, Ron. That fit the rules, not the one where I taught Claire how to split contracts. Market has been weird the past week. Got the holiday markets rolling through. It is. Everybody just came back from holiday yesterday. They're still a little hungover. Tryptophan slowing the reflexes. S&P says nothing but down. I probably just crashed it. You took a 3-ticker, but not me, right? I didn't follow the KISS plan rules, and we didn't go back and look at the KISS plan rules and see a loser. Yeah, you took a 3-ticker. That happened. Way to go, Phil. This is why we can't have nice things. You put the juju on it, Ricky Bobby. I like these days, guys. I like it when you guys say, let's trade. Let's trade live. Let's wait for rules. Is it starting to resonate that 90% of your day is doing nothing? Are you guys starting to believe that 90% of your day is just sitting on your hands? What's cool is once you get to that point, once you accept that 90% of your day is just waiting, 10% is trading, and you focus on your reads, not your rewards, that's when you become a trader. Sucks to wait. There's nothing worse than to sit in 2 hours without a trade, right? How am I ever going to make money? Hold on, I want to do some math real quick. So 252 trading days a year, right? About 8 hours a day trading. 2016. All right, so see if I remember how to do math. That seems excessive. It's probably like 0.9% of the trading days. A couple hours. The 8-figure trader says he only takes A+ setups and waits days and weeks for those setups. That's it. Worth listening to the first 10 minutes. Guys, if you've never watched Mark Douglas, he tells you that trades are probabilities. That's it. And it's not the one trade, it's the 20 trades. But it's not the results, because you'll never control the results. It's the execution of the method. And when you execute the method properly, you have an edge, you have an advantage. And when you deviate from the method, you skew the results, and you're less likely to find the success. And it takes us all a long time to believe it, and then it takes even longer to practice it repeatedly. But there really is a recipe, and it's not difficult. It's just not fun. It's not fun. It's like working in a coal mine but making 6 figures, right? It's not real. It's not fun, but it sure pays well. I've only got 7 fingers working on this salmon boat, but sure pays well. Trading isn't quite that brutal, but you would think that it is, at our inability to be patient. Fun stuff. Been a good class. I like this stuff. Triggers are down, strong side, nowhere to go, nothing to do, sit on your hands. Done. It did. I did crash it. Something Jayan said that stuck with me. Do you want to be busy or do you want to make money? Yeah. You want to know what Jayan said to me, Phil? How many times are you going to trade into that line hoping it breaks and losing money until you get sick of it? True story. That was the conversation. How many times are you going to lean on your opinions and lose until you get tired of it? Until you don't want to do it anymore? And for termination conditions, the answer was probably thousands. And sometimes you don't even know that you're going apeshit. When I used to race motorcycles, there was this thing that they used to reference called the red mist. You put your helmet on and you get on the racetrack, and it's like you're in a different state of mind. It's oh, you're aggressive and assertive and everything's there, and then you take that helmet off and you're like, okay, we're all good. Trina, ask Wayne about it. He'll tell you. And you're a different person in battle than you are in relax, and you've got to separate the two, because in battle you have to be calculated. And in battle, you have to be patient. And in battle, you have to be calm. And if you let emotions come into it, that's where mistakes happen. So, Sun Tzu, but you got to put yourself in harm's way to be victorious in battle, or something like that. The Art of War. I haven't read it in a long time. You're pretty okay at waiting until you take a loss and you feel the need to make it back. Yeah. We all do, right? Just one trade, right, Phil? All I need is that one trade and I can get it back. Maybe I'll add a couple extra contracts and then I can get it back faster. I know it's counter trend and it doesn't fit my rules, but if it works, well, then I'll be back to break even. And it's true. We've all done it. I love it because you know that I talk to all of you privately about this. I hear everybody's stories and I'll never rat anybody out. But I will own it as my own 100 times over. Revenge trading is bad. How many times will you lose the same trade? If I take a high probability trend trade and it loses, how many second, third, and fourth entries do I take before I'm convinced that it's just not going to go? I'm embarrassed to say what my record is. It's probably pretty high. But it's all normal, right? Trying to put spaces between the loss before taking another trade, maybe even walk away. And I think that's not a bad idea, right? If you losing, if taking a loss, there's two things that I ask myself, Trina. The first one is, did I follow rules? Did I follow rules? If I did, it's just a cost of doing business, right? I'm going to wait and I'm going to take the next trade. If I didn't, that's where hitting the ejection button might pay dividends for me, because I'm the same way. I'll take a trade and I'm so convinced my opinion was right. You ever been in a fight and you know you were wrong, but you have stood your ground so adamantly that you just continue to fight on the subject that you know you're wrong about? If you're married, you've done it. If you're married, you've done it, only hypothetically. I've done it. And you have that little moment of clarity where you're like, oh shit, I'm the one that's wrong. Well, I can't back down now. Trading is a lot like that. Best loser wins. Yeah. Trading is a lot like that. When you know you're wrong, just accept it, right? Do better. So my kid always says, do better. My kids are smart. Do right. Do better. And that's trading. I really do. I really think that we could spend an entire week discussing psychology. We could spend an entire week discussing probabilities. We could spend an entire week talking about the fact that you'll never know what the market's going to do. That all you have to do is lean on a pattern that you can prove wins more than it loses. I don't know. Would we walk away better for it, or would we just be mad that we weren't taking live trades? People always ask, Mark, if you would just trade live more, I could get better at this faster. Mark, if you would just enter the market more, I'd be better at this. If you would show us trades live, I would be better. And guys, every time we do it, what you really see is that trading is a lot of doing nothing. Has that been helpful to anybody? Holy crap, there's only been a couple trades that fit the rules today. And we were looking at something else when it happened, but they worked. Strong trending market. Not a strong trending market, Pete. Only 15 bars since your reversal bar. Your strong trending market didn't happen till down here. So what you have here was a strong trending market until those blips. It is still down. 28.75. 28.54 was your fib, 28.50. So right at the fib, hoping it blows, and it does. Right to trouble. And you get out. Good stuff. Was a strong trending market. Let me tell you how much I used to be able to bench press. Let me tell you how popular I was in high school. What's going on in the moment, right? What's going on in the moment? You good. You threaded the needle nicely. Threaded the needle nicely. I like it. A lot of times we point to what happened and it doesn't have any relevance on what is happening. Shoot, that might have been a good one right there. Pull right back to the area inside of triggers. Didn't quite make the fib. Looks like all of them were below. That was your trend trade. Boom. And with your stop, they might have gotten you right there. It's a nice trade though, Pete. You're really good at threading the needle. Are they going to give us something? I don't know. I need to take 2 minutes, guys. I'll be back in 2 minutes. When I come back, ask some questions. Throw some stones. Do something. I'll see you in a minute. Back. There's our pullback. Down, strong, That qualifies as a pullback to a zone. What are we waiting for? What do we need to have rules met? Close on the correct side. Room to targets. That's it, right? And if it doesn't happen, then we start getting up a little higher. We start working into that zone. We got to be a little cautious. Now we're above the mid-band. We're just thinking, what's going to happen? What are we looking for? We'll take the last 25 minutes and look at NASDAQ. See if we can find an opportunity here on Rinko. All the terminations, maybe not. Was trading directly into divergence lows. I don't see them. Phil, do you have them? I don't. I don't see divergence lows. Do you have them on your chart? I may have a problem with mine. It says that it's working. Let me F5. I'm going to reload real quick and we'll see if you have a divergence low, Paul. All right. Yeah, you guys both have it. I'm going to reload and see if it shows up. It could be. There it is. Thank you. Thank you. Thank you. That's crude oil. That's S&P. Maybe we can find some NASDAQ Rinko. Get some stuff going. There we go. Still calculating. It all says up, doesn't it? Into all the trouble. Now we got to go through that waiting period again. What would you guys like to talk about? Everything is up. Strong trending market. There's this idea, just keep buying the mid band until it doesn't work. 30 plus bars in the same direction. Nothing in the way. Look at how fast the NASDAQ moves. So momentum is assumed with this look. The challenge is when your areas are on the wrong side of triggers, entries are a little harder to define. So one thing you can do is catch it on the way up, strong trending market, put your stop below the pivot, take some profits, get to break even, see if they make it to the fib. Strong trending market, guys. That was pretty easy, wasn't it? In a strong trending market, buy the mid-band until it stops working. Since the NASDAQ is so crazy, one of the things you can do is force the market to go in the direction of your trade before you enter. And now we're back at it again. Strong trending market. Clear path. Buy a pullback to the area inside of triggers. Stop goes where the market shouldn't. If they continue, where are they going? Probably up to Fibonacci. First sign of trouble is a divergence high. Get up there. First profit's taken. We'll go break even. Let's see if they run. Any questions? That's day trading. I've got nothing to lose. Probably going to come get me. There it is. But that's what it is, right? Getting in sync with your indicators. This is what I see. This is what it tells me. This is what it means. That's my entry rule. I'll get paid. I'll go break even. And we'll see what happens. Why does it look effortless? John Novak used to make it look effortless. Do you guys know why? It's because I know exactly what I'm looking for before the market ever gives it to me. I know exactly where my trade comes from before the market ever gives me a trade. Triggers are down, transition, room to trouble. Technically, that was the close below, right? So my stop loss has to go above the pivot. And because I'm transition, I'm keeping my eyes open. Let's see what happens. Take the first profits at trouble. How's that? We'll take the first profits at trouble, and then we'll see if they want to run further with it. Does it fit the plan? That's all I need to know. There's your first profits. You guys just want to go break even and let it run? Did it fit the plan? Triggers down, transition, room to trouble. Because it's transition, I take half off at trouble. I get to break even, and it saved my bacon. That was about a $340 trade. Are there any questions? All I did was follow the plan. No? I like it when there's no questions. You guys are so smart. Because it was transition, I'm getting paid into break even. Worked out beautifully. Got paid, got to break even. Who cares what happens next? I'll wait for the next trade. Bad top, into the mid band. Triggers are rolling. Not momentum yet. Second lower divergence is awesome. We'll see what happens though. Because I don't have rule 1 met. We'll see what it does. Divergence from a 1-to-1 isn't always my best look. Keeps me on guard a little bit. Now we're breaking through. There's our pullback. I wasn't even fast enough, was I? Wasn't even fast enough. It looks like, nope, it got us. It's one of the things that happens on the NASDAQ, guys. It's fast. The entry was at the 1-to-1s. The slippage got me in 7 points lower. That's all right. Trouble still hasn't broken. Trouble still hasn't broken. Can't go short. Have to let it break. Everything is down, but I don't have momentum. Waiting for that separation. And if I don't get it, I don't trade. Guys, what would you like to talk about?